Good afternoon. A lot of people use moving averages very differently. They just use it for golden crossover, death crossover to find whether the markets are bullish or bearish. But based on the same moving averages, I predicted how Nifty would move. If you watch the video, you'll understand. My way of looking at moving averages is very different. We will see dynamic support, dynamic resistances, my entry, my exit. It defines a market structure for me. It'll tell me whether to enter or not. So a lot of things. I use moving averages in 6 to 7 different ways. One such way was actually discussed yesterday. How and why? I gave a Nifty sideways to bullish view based on one such moving average on the daily chart. I was telling that Nifty was actually bullish to sideways. For the reason why I said that was because every time market came to the short-term moving average in the last 1.5 month, we have seen a bounce off, right? Even today, the market came to the short-term moving average and we saw a bounce in the last half an hour to 45 minutes. A good bounce came. Why? A short-term moving average. Why did I say sideways to bullish? Again, the same short-term moving average and daily chart protected us and gave me a view of sideways to bullish. Not only that, if you remember yesterday, our chart, we were discussing about constant bounce off in the price whenever market came to this long-term moving average support on a lower time frame like hourly. Yesterday, I was expecting an up move because of the same long-term moving average support on hourly and a short-term moving average on the daily chart. So technically, we still have support between 650 and 700 because of the moving averages alone. And not only that, the yesterday dip that came, it was around the same level. So a natural support is also a simple support is around 650, 660 level. So basically 650 and 700 becomes a very strong support area for tomorrow also. And for this entire expiry, next 2 days, 650 will become a very strong support area as far as the technicals are concerned. Yesterday, one more reason why we're expecting an up move or support around 18,650 700 level, not just because of moving averages, it is also because of this particular column that we were discussing. Highest OI bullish yesterday was around 18,700 with 95 lakh open interest. That was one of the reasons why we were expecting 700 to 650 bounce. Today we saw a bounce in the last 1 hour or so. Even now, today, 18,700 remains the highest put open interest, which becomes a support area for this expiry. Yesterday, we had about 95 lakhs open interest. Today, we have 1.20 open interest. It means there has been a constant addition to 18,700 put side, making it a strong support area for this expiry. 650 to 700 from technicals, 700 from data. So, two different support areas coming from uh, uh, technicals and data around 650 and 700. So that becomes a very strong support zone for Nifty. As long as the market sustains above 650 700, we will think about buy on dips. And where was the highest call open interest yesterday? It was 19,000 with 1 CR open interest. Today, it still remains at 19,000 with 1.1 CR. So some addition is seen at 19,000. So option data is suggesting a range of 18,700 to 19,000. Technicals is suggesting a support around 650. So as long as 650 and 700 holds good, we will still hold on to a bullish view as far as Nifty is concerned. And for tomorrow, Bharat, what will happen tomorrow? Are we probably touching because we are giving a range of 700 to 19,000? Are we going to touch 900? If we have to touch 18,900 tomorrow, we have to sustain above 18,800. 18,800 because 18,800 was the highest put rating today. Around 34 lakhs by 330 we saw about 34 lakhs addition to 18,800. So there are put traders who are sitting at 18,800. So if 18,800 put traders do hold the market above 18,800, forget about 700. If 18,800 is held, we would probably see the market testing 18,860 to 18,900 levels. The key for the market to test 18,900 is this 18,800 put traders with 34 lakh open interest built up today. They have to do a very terrific job of holding the market above 18,800. Overall rating on the put side is about 1.2 CR, pretty good. Put traders are confident. Unwinding to a tune of 11 lakhs on the call side. So option data suggests again bullishness. So Nifty, the story is Nifty continues to stay above short-term moving average. 650 becomes a support area from moving averages. We will stay bullish as long as 650 700 is held. So technical support is 650 700. Highest put OI 700. Intraday rating 18,800. So we have 18,800 as the intraday support for tomorrow. 700 to 650 is the support for this weekly expiry. So we will stay bullish to sideways on Nifty. Having said this, Bank Nifty, on other hand, we had a sideways to bearish view, and we did see a dip in the morning, and this dip exactly stopped at the support area which was created on Thursday, last Thursday. This sell-off was actually on Thursday. From Thursday, Friday we saw a rally. This rally, where did it stop? It stopped at this long-term moving average and hourly chart. So in the last 3 4 days or couple of days, every time market came to this long-term moving average, we have seen a comfortable sell-off. Where are we right now? We are at the same long-term moving average. So long-term moving average, which is around 43,800, will be the resistance area. Now, if I have to hold on to a sideways to bearish view, especially, I need a lower high. Where was the previous high? It was 44,060.65. Now, if this market sustains below 44,000, it will be a lower high structure on the hourly chart. And 43,800 is a resistance area already. So 43,800 to 44,000 becomes a very strong resistance area for me. If the market sustains below 44,000, struggle around 44,000, if it is seen tomorrow, I would maintain the same view of bearish to sideways. And probably this market might again test this 43,400 levels. So 44,000 and below, I will hold on to a bearish view. Bearish to sideways view. Right? It's not going to break this level so easily, because if you go to a daily chart, the same long-term moving average, there was a bounce on Friday and there is a bounce today as well on Tuesday. Now whether this bounce is going to touch the Friday high or not decides. If it doesn't touch us for Friday high, we will have a lower high. So 44,000 and below, hold on to a bearish view to sideways view, bearish to sideways view with 43,400 as a support area. Option data also speaks the same thing on Bank Nifty. Bank Nifty highest open interest on the call side is around 44,000. Yesterday we had 55 lakhs. Today we are sitting at 51 lakhs. Small unwinding, not alarming. So 44,000 still remains a bearish or a resistance area for options data Bank Nifty. Highest OI bullish was 43,500 with 33 lakhs. Today we have seen some addition to 43,500 puts, and 43,500 still remains a support area. So technically also 43,400 is a support area. Data wise also 43,500 is a support area. Resistance is 44,000. If you have to lower high 44,000 and below, option data suggests 44,000 resistance. So below 44,000, slightly bearish view is better. 43,400 will not be broken so easily. If it breaks, it will be a catastrophe. But I don't think it's going to break so easily, because that's a support on the daily chart. It's not going to break so easily. Option data is concerned, today's data suggests bullishness with 45 lakhs addition on the call put side and about unwinding of 3.5 lakhs on the call side. So basically, data is bullish, but technical structure is bearish. Bearish only below 44,000. When we will switch to bullish view, only above 44,200, because we have been struggling to cross 44,000 in the last couple of days. So only above 44,200 we will have a bullish view. Below 44,000, bearish to sideways view is better on Bank Nifty. So sideways to bearish view, 43,400 on the downside, 44,000 on the upside is better as of now. We will play sideways to bearish view if it trades below 44,000. Only above 44,000, we will have a bullish view on Bank Nifty. Let's see how the markets behave to the levels that we have discussed today. And good luck trading. If you want to keep getting these updates, do follow us on all social media. And thank you so much for watching us. Bye bye.